If you think you can just keep increasing rents, think again. The rental boom is well and truly over, and investors need to be more cautious than ever when purchasing investment property. My name is Gianni Musumeci. I'm from Leverage Property Advisors, and I help rentvestors, wealth accumulators, and pre-retirees make their first or next step onto the investment property ladder. In this video, we're going to go through why the rental boom is over and what you can do as an investor to ensure that you purchase a property with adequate cash flow and good rental income. Stick around to the end, guys, because I've got a free capital growth report that is going to show you areas that are likely to grow in the next few years that have a median price point of under $500,000. I've done all the data digging, all the research and analysis for you to show you why these 5 areas are highly likely to grow in the next few years, and it's for you free. So stick around to the end. But before we keep going, do me a big favor, like and subscribe, because the bigger the audience, the more value I can provide back to you. So here's why the rental boom is well and truly over. As interest rates started to rise, so did rental yields, and investors had an excuse to raise rents. In addition, we had high levels of inflation throughout the country, which investors were also susceptible to. I saw a lot of 2-bedroom units on the market, and this was simply because a lot of investors were selling off their investment property because interest rates were rising, insurance premiums were rising, strata costs were rising, council costs were rising, and all in all, it no longer became feasible to hold their investment properties. So nowadays, as we're seeing more listings come into the market through distressed selling, namely investment property owners, we're starting to see more and more vacancies come to market, which is a good thing, particularly for renters and investors that can pick up a bargain. In addition, there's also been an uptick in the number of new developments coming to the market, which means there's more and more stock coming onto the market, and particularly for some first home buyers who can take advantage of first home buyer grants or new development grants in some states. This can be an added bonus because they have additional funds in which to get into the market with. Another reason why the rental boom is well and truly over is because renters, just as much as landlords, are feeling the affordability issues. All in all, if you're looking to onboard a tenant, you should look for an affordability ratio of roughly 30 or 40%. 40% is absolutely stretching it in my point of view. So if you're looking at a tenant's income when you're assessing them in terms of whether they'd be a good candidate for your investment property, I would aim for 30. So you want to make sure that the rent is 30% or less of their household income that they're going to bring in. This shows that they can actually afford the rent and they're not going to struggle 6 months down the track to pay rent. Now, just as much as landlords, again, renters are having these affordability issues because household savings are dwindling, cost of living is coming up, and rents have come up over the last few years as well. So that being said, this has put a hamper on rental growth because there's an affordability ceiling that I strongly believe that we've hit at the moment. The third reason why the rental boom is well and truly over is because of the introduction of new legislation that has seen landlords limit the number of rental increases that are available to them, and also remove no reason eviction, and then lastly, make it harder to evict a tenant. Nowadays, what's happening is laws have been introduced to limit the number of rental increases throughout a year. In most states, it's normally 1 per year. And there's some limits as to how much you're able to increase the rent by as well, depending on what state you're in. All in all, there's new legislation that makes it harder for you to increase the rent and the number of times you increase the rent. So all in all, there's a few reasons why I strongly believe that the rental boom is over and landlords can't just get away with raising rents 10%, 15%, 20% in some cases. Because of the economy, inflation, interest rates, and market pressure of supply and demand, because of affordability caps for landlords, because of affordability caps for tenants, and because of new legislation that's being introduced. So what's the solution as an investor? Because the alternative is to sell your investment property under duress. Firstly, careful research as to where you're actually purchasing. Look for areas that have trending lower vacancy, increasing demand, and good prospects for rental growth. Secondly, purchase an investment property where it meets the demographic. I often use the example, I wouldn't buy a 3 or 4 bedroom home in the city, and I wouldn't buy a studio or 1-bedroom apartment in the suburbs because it doesn't meet the demographic of the area. So in that solution, look for something where it meets the actual market demographic as well. And you can almost guarantee the demand because you're purchasing an investment property that's fit for purpose and you're considering a customer. Often I say that we're not in the investment property business, We are in the long-term accommodation business and we need to consider our customer. And lastly, consider your cash flow. I see a lot of amateur investors just looking at the gross rental yield. They buy inner city apartments where the yield might be slightly better than a house, but ultimately that is the gross yield and you're not considering the underlying expenses. Things like strata, insurance premiums, council costs, water rates, ongoing maintenance, ultimately will eat into your cash flow and you'll be left with nothing, if anything. So look, thank you everybody for watching. I hope you've taken some value away from this video. Just to summarize that solution set, look to purchase an investment property that's meeting your customer demand for that particular demographic. Consider your underlying cash flow and look at the macro data. Consider the supply and demand metrics that ultimately mean you'll be able to generate some rental growth out of that area, as well as capital growth. So look, thank you everybody for watching. I hope you've taken some value away from this. Do me a big favor. Don't forget to like and subscribe. If you are looking for a little bit of guidance as to where to purchase, I've got a white paper report out on 5 high growth locations that you can purchase for under $500,000. These areas have a median price point of less than $500,000 for a house. And I've done all the data research and analysis on these areas to show you why they are actually going to grow in the next few years. I'll include the link to the report in the comments. I'd love to hear if you have any questions.